first time I met you and only time I've actually met you, I was picking you up in a car and driving you to your hotel in Vancouver. Do you remember that?
Yeah, that was a while. That was pre-COVID, I think, when we could get
Just before.
With strangers.
Yes. Yes. So I would imagine that your site visits have ramped up worldwide. Is that a thing now?
Yeah, I've gone on a lot more site visits this year, definitely, than last. Last year was constrained a bit to Canada and the States. Now I'm definitely getting out and about more. I've got a trip right now on Sunday to Europe, to Finland.
Awesome. That's I'm sure you're excited about that. How long has it been since you've been to Finland?
I think the last time I was in Finland was it was pre-COVID. There was a conference up there. And I went actually to visit Rupert Resources when they just started their initial bottom of till sampling on top of Ikari, which is now almost 3 to 4 million ounces right now. And that's one of the projects I'll visit, as well as Orion, which is right to the west.
Yeah, I think I've heard you talk about them before. So that's obviously a stock that you own in your portfolio, or that you're continuing to watch.
Yeah, Orion, whatever. I own that one, and that's basically for leverage to potentially finding another Ikari to the west of the actual deposit.
Got it. Well, thanks for your short your availability today on short notice. There was an article that came my way, and it was published under Benchmark Mineral Intelligence. And the headline is more than 300 new mines required to meet battery demand by 2035. And you're the first person I thought of in regards to maybe getting some additional comments on this. Have you had an opportunity to read it over?
Well, I mean, I'm pretty well familiar with what's happening in terms of, I've gone through I've given a couple of presentations on critical minerals, and studied the IEA report, as well as reports from Australia, Canada, Europe, and the States. And what I gleaned and what I sort of presented to several places recently was the current idea of actually fulfilling the requirements for 2040, where we're trying to get to this carbon neutral society, are highly flawed, due primarily to the lack of resources available. And it's one thing about the current production and the demand that we're contemplating, but then it's also because of, if these are new projects, the average lead time for a lot of these projects is 15 to 20 years. So I don't see how they're going to fit in the time frame that they're talking about. Right. Now, and in regards to the bold headline about them saying we basically need 300 new mines, do you think that that's a little bit far reaching? Do you think that we already have sort of, projects in the pipeline right now that maybe could use funding? To me, that's a rather big number, right? When I think about lithium, for example, the world has a lot of lithium. Do we need, probably, would it be accurate to say, there's between 15 and 20 mines that would be needed to supply the demand for lithium? Well, the thing is, it depends on the size of the mine, obviously. Right. But I mean, if you look at lithium projects, just take two of them, two significant ones potentially. One in Serbia, the Jadar mine, which Rio Tinto is trying to permit and develop. That one, their permits have been canceled. And so another one, Thacker Pass, which is a lithified brine, which is, I believe, Lithium Americas. Now the NGOs and the local ranchers, as well as the First Nations there, are concerned about the implications of lithium mining to the water there. So those sort of issues, we want a cleaner environment and all that. And then we need these minerals to generate this carbon neutral society. But at the same time, extracting these same minerals leaves an ESG footprint that you're either comfortable with or you're not. So if you're not comfortable with it, I don't care if you need 300 projects. One, permitting, development, financing, all that stuff takes time. And two, even
right now, the hassles of actually getting some of these projects up and running. I think the money is there right now, mostly from government, like the Department of Energy, Department of Defense, Department of the Interior. There's funding available to develop projects, but there's not a lot of projects that it seems like everybody can agree with on that'll come online. So that's more of my concern right now. It's not that there are 300 or whatever projects out there that we could fit into the pipeline. There's no way that those projects are going to be developed in the next 20 years, all of them.
Got it. Now, when it comes to battery metals specifically, do you have one that you like more than others, or are you just a fan of all of them?
Well, I mean, the thing is that, you can't own everything. And so, the lithium's obviously done well. The thing that I like is the infrastructure required. And so if you look at the intensity of some of these metals, and I'm very familiar with copper and I like nickel and that, but the infrastructure required in the cars, the wind turbine, all of that requires a lot of copper. And so for me, that's one I like because it's a liquid metal, liquid meaning that, a lot of people have it and it can move. It's not just a single demand sort of metal, but all the infrastructure requires a higher intensity of use in copper. So that's one I'm particularly fond of, because of my background with working for copper companies, but also because I can see that being an issue.
Right. I'm going to just move this conversation more to macro stuff. If you're not comfortable there, that's okay.
Yeah.
But you do a lot of site visits. You were an analyst. So if I was looking to find, for example, say the next Great Bear resource, but a lot of investors remember that story and it's a success for many. If I'm trying to find that and I'm looking at copper stocks, junior stocks right now, does it not sort of make sense to kind of wait for this recession that's either here or supposed to be coming and a market sell-off and then get in? Because a lot of people look at these stocks right now and say, wow, these things are super cheap.
Yeah.
But really, it's, to me personally, it still doesn't make sense to take a position on some of the things I'm watching, because I do believe the market's going to go lower. What's your take on that?
Well, I'm in it to win it. So I'm in it already and I'm down on most of them. But the thing is that I see the problem with the lack of supply. And so I've refined, the types of copper companies I want with respect to exposure, because one of my friends, he's a portfolio manager, and he said, why settle for the chuck steak when you can get the Wagyu beef? And so in this kind of environment, that's what you want to do. You want to refine your targets to checking all your boxes, because you're going to get that Wagyu at a discount right now. And copper right now probably has less negative implications as gold does, because gold is sort of sitting there with higher interest rates coming for another 2 years. There's still going to be M&A in gold. And if you think about a gold project, that should be your underlying premise, because right now the market really doesn't care. And that's why you're going to get cheap, but it might be cheap for a long time. With copper, I can still see the issue because it's really more about zero COVID policy in China that's reducing the demand for copper, that's making there seem like a bit of an excess of copper right now. But that could turn on a dime. And then if we get market segmentation, like I can't get my copper from here or there, where can I get my copper from? Then you got to think about which companies make sense, if you're looking at it from a Western perspective versus a Chinese perspective,
Yeah, well said. Thanks for those comments. And I do agree on interest rates. And further to that, this flight to safety in the US dollar is another catalyst for, downward pressure on gold. I actually sold a gold position about an hour ago. I was able to just get out of it for, basically my entry and a little bit more, but I don't feel comfortable with that trade anymore.
Originally it would have to be a high conviction play that you think is going to take it out, because you can't depend on the market to bring it up. It's going to have to be the industry that puts that premium on it. So I could see that more from a supply demand side for critical minerals like copper, nickel, and things like that. I can see it less from the precious metal society perspective, but still, I own quite a few precious metal companies that I still think there are, opportunities for bigger companies or intermediates to consolidate. So I'm not selling them because I like them. The ones you should sell are the ones that you've lost conviction on, that something else has happened, metallurgy, permitting, something like that says you, well, this is not going to be something anybody wants.
Right. I got to ask, do you have one district in the world that you absolutely hate for mining and maybe wouldn't even never invest in, regardless of the grades or the size?
You know what? In terms of I'm not afforded the luxury of saying, hey, I can't stand this, because I'm not going to be the one that buys that asset. It's going to be a bigger company. And it really depends on the bigger company's appetite for jurisdictions. So if some company goes into a jurisdiction that, let's say, I'm not even comfortable traveling myself, but they're willing to, acquire a project there, then I'll have another look at that jurisdiction. The problem is when you look at jurisdictions that are high risk, the volume of potential bidders for that asset is greatly reduced. And so that means that your premium in a competitive bid is probably highly unlikely. And so that's the sort of way I think about more highly risked jurisdictions. Even though the grade might be good, it might be a nice project. The problem is that if somebody takes it out, is it only going to be one person, and then they can wait as long as they want, or they might not offer much of a premium.
Okay, I'm gonna be more specific. Let's think here in Canada, assuming you're in Canada, the Golden Triangle.
Yeah,
that's a polarizing place.
That's a good place jurisdictionally. It's not as infrastructurally challenged, let's say the Yukon or the Northwest Territories, or none of it. But there's only a few projects right there that have the kind of grade that are phenomenal. But it doesn't stop big companies from looking jurisdictionally and say, I'm having problems in Chile, I'm having problems in Peru, Mongolia is not working out so well, or whatever, and say, hey, why don't I invest in something that I know can get permitted in a stable jurisdiction with water and with power? And that's what people are looking at, because if you look at through the Southwest states and things like that, is, one of the other issues is water, and that's throughout the world. But Chile's in, I think it's 10th or 13th year of consecutive drought conditions. So water is a huge issue. So it's not just about finding the copper, it's about finding the water so you can process it. And that's another issue, but that's not a problem in British Columbia, so Canada has a lot of advantages there with respect to infrastructure. And you could see that with Rio Tinto's investment in Casino. It's a remote project, but they probably think that they could get permitted. And in the long run, maybe the government will help them with the road. Maybe they'll help them with the power, but it's not going to be cheap. But considering they've had issues in other countries, maybe that's what they're thinking. At least this is stable.
Got it. And out of all of the battery metals, which one would you say is hardest for exploration companies to find? So what's the hardest one to find in the earth from a geological perspective?
Oh, I don't know. The thing is, in critical minerals, the U.S. has put out a list of critical minerals. That's about, I think it's about 50. Canada and Europe are at about 22. So there's heaps of minerals out there that they know they need for cars, batteries, long-term batteries, wind turbines, the whole kit and caboodle. I don't know the whole gamut of what's harder to find than others. It's more about supply chain. It's like, if you look at from the US perspective, when they have this EV credit for critical minerals as well as critical battery components, it's not only about the actual what's considered critical. It's considered critical sometimes because of where you can and can't get it from. It might be abundant, but you can't get it from the countries that you want to get it from because you have free trade agreements with them. You're not going to get it from China. And the other part of the equation that we haven't talked about is processing. So it doesn't even matter if you mine it. It's most of the processing infrastructure over the last 2 decades has built up in China. It hasn't been building up in the West. And it's more problematic, I would say, for copper than for nickel. Nickel is more vertically integrated in a lot of big companies, but not so copper. You could find a copper mine in the States, Canada, Chile, Peru, whatever, that can trade with the States. But where are you going to process it? Where is it going to be smelted and refined? Most of that smelting capacity is in China, unless they can send it to Korea or Japan. But definitely the bulk of the capacity is in China. And that goes for a lot of other what are considered critical minerals.
Out of all the mining companies in the world, large cap mining companies, what is your favorite mining company as far as management goes and being run properly?
Well, I mean, the thing is that mining company, I worked for some big ones like RTZ, Newmont, Phelps Dodge. They can be cyclical with respect to management, just like anything can. You get a new CEO and then, he wants to do big changes and they either work or they don't. None of them are sort of run like a bureaucracy where the underlying bureaucracy keeps going and it just keeps doing what it's doing and it doesn't matter who's the CEO. Now the CEO has more implications. I mean, we saw that with Rio Tinto when they made that mistake in Western Australia. They had to change out management and a bunch of board people, and it gave them a big negative, ESG mark. And so when a junior is working with Rio Tinto, it's not the junior's reputation that the junior's worried about. It's more like Rio Tinto's reputation. Will the locals actually accept Rio Tinto? So that's an issue. And so if I'm looking, and I am looking, and I'm thinking that, hey, I want to get exposure to copper. I want to get exposure to nickel. I want exposure to lithium. On a broader sense in the current market, what I'm looking at doing is just creating a little basket or a big basket, whatever, of these kind of companies like your Rio Tintos, your BHPs, your Teck. Because the other problem is that over from 2020 to 2040, we still need oil and gas and we still need coal. So underinvestment in any of those will make the prices of those just go up because there's no way that we're going to get through this transition period, which might last 2 decades or more, without the support from still carbon technologies.
Yeah, very well said. My last question for you, Joe, because I'm going to let you go here and get off to Finland, I believe. If thinking specifically for retail investors, you go to a lot of different conferences, right? What would you say is the best conference for a retail investor to sort of mark that one off on the calendar and try to get to?
Yeah, I mean, it depends what you're looking for. If you're looking for big companies, small companies, precious metals versus base metals. I mean, the one I went to just recently, I mean, I've been going to it for more than a decade. The Precious Metals Summit in Beaver Creek is probably one of the best. And now they do a lot more than just precious metals. You can find a copper company there, a nickel company there, a lithium company there. You can find anything there. And so a lot of people have sort of gone and gravitated towards that one. So that one, for me, is one of the better ones to take a look at. A lot of companies, and not just North American listed companies. You'll see ASX listed companies as well because they mark that one on their calendar as well.
Okay, I'm going to ask you a couple of actual fireball questions here. So just let me know if you go long or short. These are just fun questions, hypotheticals. We all know you can't really predict the macros of the market. Long being, say, 12 months, and then short 12 months. Gold.
Yeah, I'm probably flat. I'm not selling because I think it's probably overdone. But what we have to realize that gold is really being driven by the US dollar. In other currencies, gold's actually doing pretty well.
Yes. Silver
on the industrial side, there's probably more upside there, but I'm sort of long a little bit silver just because I'm not a silver nut job or anything like that. But what I like is that silver companies, in terms of M&A, are looking for more silver projects, silver dominant projects, not base metal silver equivalent things, but actual silver projects. And so those are something I'm looking at. Is those ones, and I continue to hold some that are dominantly silver because they're rare. They're still rare in this market.
And I think there's been a divergence between gold and silver, whereas silver inventories are extremely low. I mean, I think they could be like out of reserves within 6 months. Now, I can't accurately quote these reserves, but it does get floated my way through my contacts. So I don't know if you've seen that, but it looks like there could be a silver squeeze regardless of what happens with gold.
Yeah, I know silver is sort of diverging, but I would say on the M&A side, that's really what I'm looking at is that silver companies are looking for more silver dominant assets as opposed to trying to get away with just a lot of base metals and lead and zinc and something else. They're looking for more pure silver exposure. And so if you're going to play the silver space, that's what I would look for.
Got it. Okay. Copper, long or short copper over 12 months?
I'm long. I'm in it. Yeah.
You're in it to win it. Okay. Lithium.
Lithium could come back a bit, but the problem is that, once you hear about all these lithium projects that they're trying to bring online that can't come online, then I would be more long lithium.
Okay. Nickel.
Nickel, I'm long nickel, definitely.
Is there one that sticks out to you want to comment on? Those are the ones I follow.
Yeah, those are the ones I'm mostly in that, because I tend to pick commodities that are, let's say, more liquid, such that one company can't bring on a large mine and completely kill the market. So I try to stay out of those kind of commodities. I mean, rare earths, is not so rare, but processing it is difficult. And so those are the sort of things I do look at. And one company that I do own has that a kind of exposure. The other one would be uranium as well. I do have some exposure to uranium with the idea that might be a bigger mix of their people's energy policies going forward. And if, with the announcements from Japan and Korea, that might bring down that overhang of inventory that's been holding a lot of reactors and power companies from basically signing long-term contracts. And that's what's changing right now.
Yes. So I do follow uranium. That's a very interesting one because it trades outside the market. The market could have a complete, liquidation event. Actually, I shouldn't go that far, but the market could sell off really aggressively. And then you look at uranium stocks and they're just sitting there doing nothing or they're green. But it kind of does seem like uranium is the only, scalable real world solution for energy.
Yeah. I mean, there'll be more solutions once they figure out how to store energy from renewables that are more cyclical, and they can store that energy and use it. Then some of these renewable energies like wave power or wind turbines will be more effective. But right now, nuclear energy is one people are definitely looking at, and it's one probably Germany thought they would have wanted to have more exposure right now than having to refire up coal plants. Yes,
that's true. Because the price of coal has gone up, I think, Well,
the thing is that's a commodity that's been underinvested because all these new ESG funds can't invest in coal.
Right. That's right. I got to follow up on something that you said though. So when, in regards to uranium, a lot of utility companies, I would assume that's who it is, are not signing long-term contracts. And you commented on why that is. So can you just kind of elaborate on what's changing and why these utilities would actually take up these long contracts?
Like when Japan shut down and their nuclear power and decided to get off nuclear energy, then they were more exposed to oil and gas and LNG and stuff like that. That basically generated a big inventory of uranium that was on the market in different forms. They weren't even taking, they were battling Cameco at one point in terms of, taking some of the uranium that they had delivered or promised to deliver over a long-term contract. So all that inventory was building up either at, in Japan or at producers, and so at me as potentially a power company, why would I go to sign a long-term contract at $40 when I could get it at spot for 25? And there's enough spot out there that I don't want to get into an environment where I'm constantly spending, paying 30 to 40 when I could get it for 20 and there's more than enough at 20 to 25. The problem now is that with the announcements by Japan and Korea and these new ETF funds like the Sprott Fund, they're slowly draining that spot market. And so if you don't have a long-term contract signed, the problem is that if you do have to go back to the spot market, there might not be any, but more importantly, it might be a lot higher. So if people have that fear that the spot market might go up and the availability will go down, then they will sign long-term contracts, at a premium.
Can you speculate here with me? If you don't feel comfortable, totally cool. But you did mention the Sprott Fund going and buying up, pounds of uranium. Do you think that that's to put pressure on the price? Because I've never been able to figure out the inventory that you're talking about that came out of Japan, and they're sitting on all this uranium, but they're basically just putting it out in the market to get rid of it. But nobody really knew how much uranium it was.
Yeah, nobody had a number. Nobody had a number, but I had estimates maybe several years ago. But the fact that there were no long-term contracts signed is telling you that the number was significant.
Yes. Okay. So do you think
now it's turning?
Yep.
Now it's turning that the power companies are looking at long-term contracts. So if you read the quarterly reports from uranium producers, you can see that that's one thing that's changing right now. Got it.
Okay. And would you say that maybe that was one of the reasons why Sprott brought out that fund, was to start drawing out of that? Because they got to be long in all the uranium stocks anyways, so it's going to help them.
Yeah, I mean, you'd have to ask them.
Okay.
I can't get in their heads.
I understand. Okay, well, you know what? It's been a fun 20 minutes or so with you, Joe. Absolutely fantastic. I'd love to get a hold of you, over the coming months for market commentary, or whenever there's something that happens significantly in one of these, critical metals. Have a fantastic trip and be safe.
Great. Thank you very much.